Good afternoon, everyone. Welcome to Our 2 Cents. My name is Clinton Smith, and I'm the CEO of Government and Civil Employee Services. I'm here with GCS's our founder and our president, Galen Bargerstock. Galen, how are you?
Good. How are you doing today?
It's another great day.
Yep.
Yeah.
Sure is.
I'm excited to actually talk about our topic today. Whenever we started in the beginning, we started out basically selling life insurance. And that's a way that a lot of people start in this business, is that they learn how to sell one thing and then they sell that same thing to everyone that they know, regardless of whether or not it's something good for them. Can you tell me how you learned that that wasn't the right thing to do?
Yeah, I've learned very well at the beginning that that's not what you should do. But I answered a job ad off Craigslist of all places, and it was to work with federal employees to talk about their life insurance. That company pretty much trained me how the life insurance aspect worked for federal employees. That's all I really did at first, but that company, it was a bad economy. They went bankrupt within the first 3 months that I worked there. And, marketers saw that maybe I had some input on what could be done. So we kind of branched off and did our own thing.
And I know specifically, whenever we started in the very beginning, I remember sitting at a seminar that we were doing, and we had a client that was in the back, and I remember his name was Perry, and I remember that he was paying I want to say $660 a month for life insurance. He was only there for us to fill out his retirement paperwork, and then he was going to retire. So, those numbers are ridiculously huge. I remember he was 62 years old. Yeah. Do you remember this situation?
I do. It happens, unfortunately, happens a lot. When you're younger, no matter what job you're in, federal employees, for instance, with us, they elect their group insurance policy when they're younger. And then as they age, it gets more and more expensive because they're aging and the policy is aging, and they just want more money to keep it in force. So you might be paying $3 or $4 biweekly when you're younger, but now all of a sudden you're in your 60s and you're paying $150 a paycheck. And, I just ran into it last week again, another story like Perry, where people have kind of accepted it because they don't really understand even the deductions on their paycheck and what the employee benefits are.
Yeah. And I guess I didn't even mention the topic of our show today, but it is actually ways to save on insurance. So this is something we want to talk about because it's something that we see a lot whenever we're meeting with clients, that they're overpaying for insurance, they're paying for insurance that they don't need, or they're paying for insurance that they don't even want if they understood what it was about.
Yeah, to me, it's the educational idea of everything. If you are informed on how all lines of insurances are going to work, you're going to be able to correctly choose the one for your family situation. And then if there's excess money, you can put that towards your investments, and that helps you towards retirement. So
let's break that down. You just said that there are different lines of insurance. Tell me what you mean about that. What you mean by that?
Different lines of insurance? Well, as far as insurance goes, you have your standard term policies that will last a certain term, maybe 10, 20 years, 30 years. And then at the end, poof, they're gone, and they go away. You have whole life insurance. Whole life insurance is going to last pretty much what it says, your whole life. My personal favorite, I like universal life. Universal life is permanent. It's kind of like in between where you're going to get more policy value, investment grade.
So life insurance is one type of line of insurance.
Correct.
What are some other lines of insurance other than life?
You have health insurance, cancer insurance, disability insurance. There's so many different types of insurances that you could be purchasing throughout your career that might not be appropriate for you at that stage of life.
Yeah. Listen, there are so many different lines of insurance, different types of insurances. We're going to talk about ways to save on insurance. We're going to break it down into 3 different types today. We're going to start talking about life, then we're going to talk about health insurance, and then we're going to go over other types of insurance, which would be stuff like cancer policies, disability policies, vision, dental, anything that's not life insurance or health insurance. So that's how we're going to break it down, just to keep it simple for everyone. And I want to remind you, if you have questions about insurance, life insurance, any of these things that we're going over today, you can always give a call to the number on the screen, 888-391-3465, and you can set up an appointment to meet with Galen or one of our other advisors that'll sit down and help you understand really all those things that you need to know about insurance, and retirement. So let's start by talking about life.
Okay.
Right? So obviously, we all know, get it when you're younger.
Oh, definitely. You need to purchase it the second that you think about it, because you are aging every single day, and every single day that premium is going up, and you just want to make sure you have the right protection for your family.
Yeah. So guys at home, I know that we're all working against the clock. If you are going to be able to purchase this policy or life insurance when you're younger, that's the best way to save on money, because just to explain, why is it cheaper for people when they're younger that don't understand or don't know?
And life insurance is all based on a mortality timetable, and the older you are, unfortunately it's the way life goes, the closer you are to the exit date. So it's not if you're going to pass away, it's really when you're going to pass away. So if you buy it when you're younger and purchase a policy, you're going to be able to have a lower rate, and it's probably also going to save health conditions, because as you age, you might, get diabetes or high blood pressure, something that you would get rated for.
I know I probably don't look like it, but I'm 40. What is an appropriate age where you think, like, hey, by this age, you missed the ball? Is that a thing?
There are always sweet spots where it's not like doom or gloom, but at the age of 50 to 55 is primarily when I find that employer benefits in general, where you're getting their life insurance, a group from your employer or your union, they kind of become obsolete, and then you would have a better value if you purchase that on your own. So 50, 55, but honestly 30, you should really examine young.
What is that again? Tell me that again. You said term versus group?
Yeah, so a term life insurance would be a term like a 10, a 20-year, a 30-year term, like I said before. Group term insurance is a little bit different. So group term would be that your employer is purchasing a plan for you, and you are in that group. So it doesn't matter what your health conditions are, but unfortunately that's the downside to them. It doesn't matter what your health conditions are, so as you age, the price is going to keep on creeping up. They're not going to kick you out. It's just going to become very expensive, and you're going to cancel it and lose all the money you paid in.
Yeah. I know whenever we've worked with tons of federal employees, we all know FEGLI goes up every 5 years, federal employees group life insurance, and that's what a term is. They're in a 5-year term policy, and that's really, even for younger people, a term policy is extremely cheap, where you can get $100,000 for a minimal amount of money a year, but that's always going to go up the older you get, and you get into new terms as you get older, closer to your final exit date, we'll call it.
Correct, yeah. I mean, unfortunately, I can't tap dance around it. But if you have the appropriate policy at that age, you're going to save price. I'm not even going to bash term policies, because they serve, everything serves a purpose. But a term policy, if you purchase the correct one, you can save your health and maybe convert that into a different permanent policy later on in life. So even if you're just addressing the term issue at the beginning and not doing investment grade, you still want to have the options on there to maybe convert it into something in the future.
So we have term, we have group. What is whole life? For people that don't understand, very quickly, what is whole life, and what does that mean?
The easiest way to understand whole life is it lasts your whole life. It's not going up in price. Some companies will have a paid in full marker, like at age 65 it's paid up. Some will make you pay until you pass, but it's not going to change in premium. You're going to have a guaranteed value at the end, and most of them will build small cash values. Some of them have guaranteed interest. It all varies, but it's always permanent for the rest of your life.
So for those of you at home that are trying to break this down in your head, term is like whenever you go and you rent a place to live in, Whenever you move out of that term of renting that house or apartment, whatever it is, you own nothing. You get nothing out of that. But whenever you buy a house, like a whole life policy, that's where you're going to have it for the rest of your life. You pay it off. It's your house forever, and it never goes away. That's the difference between term and whole. Term is where you rent, whole is where you buy.
Correct.
Right?
Yeah.
So I know that, let's talk about health. Do you know what I mean?
Yep.
And I know that we've seen this a lot. Whenever we worked with any type of group policy, the person is paying for the health of the entire group of the people that are in that policy, right? Like,
Correct. Yeah, there's like a basic plan, a standard plan, you know, and the basic plan might have some benefits. You have to stay inside a network, where the standard plan you might pay more, but you can go outside the network. So yeah, you're going to pay, but they've negotiated price with the employer.
Yeah.
So it's going to be the same in that employer range.
Well, ultimately, I would assume that if you're a super healthy person, you run 10 miles a day, you don't smoke cigarettes, you never drank in your life, you could probably get something that's a little bit better for you on the outside rather than getting that group policy through your employer. Is that what we're saying?
No, I mean, your employer plan that you're in with health insurance is probably the best price that you're going to get. Life insurance?
Yeah, we're talking life insurance.
Yeah, life insurance, definitely. It's going to be right there with the employer, but you can go outside and get a better policy.
Yeah. Okay, so again, if you're healthy in life insurance, it's better to get your own policy on the outside rather than going through group, is what the point that I'm getting at. Would you agree with that?
100%. Yeah,
Okay.
Use your health, base it. Yeah, you're going to have to go through underwriting, a nurse is going to have to come out and see you, but at the end of the day, you're probably going to get a better deal than if you do something group-wise.
Excellent. So guys, I know that all of these things that we're going to talk about, we also want to talk about some benefits of life insurance that no one really knows about. What are some benefits? What's the number one top benefit that you can think of life insurance that people might not even know about?
It's tax-free. I mean, when you pass away, all the money will pass on to your heirs tax-free. So, of course, that is a fantastic feature because now you're not paying the IRS their cut in order to leave money onto your loved ones.
So guys, we're going to take a quick break. Once we get back, we're going to talk about all of the different ways that you can start saving on health insurance and things that you should consider when looking into that. So what got me into the business was really a series of events that led up to us doing it together. Galen and I were together for 10 years probably before we started our company. Before that, I was in restaurant management and hospitality, and a lot of that is carried over into our business. But I got laid off from a restaurant, and he said, hey, do you want to start setting my appointments? And then we made a logo, and now here we are 12 years later. So one of the things we've learned and noticed in this industry is that a lot of agents and companies just try to go in and sell everyone the same life insurance product. And that's something we really had to battle against in the beginning. We worked primarily in the beginning with postal employees, and a lot of them were taken advantage of. All of them have the same product, life insurance product, whether or not it worked for them. And that's why I like what we do, because we're not just out there to sell a product, we're out there to make the right decisions for people and use products that are actually good for them. So it's not all about making a sale, it's more about finding the right piece to fit into the retirement puzzle. If you go to a big box company, you're going to get a big box product. If you go to somebody independent, that independent person is able to search multiple companies to find the best thing that suits your needs for retirement. So I'm really excited about the way that the business is going now. You know, we've been in it for quite a few years, and we're excited to get to bring on more people into the family. Everybody, welcome back. We've been talking about different ways to save on insurance. I'm here with our financial advisor, Galen Bargerstock. He's the founder and the president of GCS. And Galen, thank you so much for going over life insurance with us. I know that it's very confusing for a lot of people, so I'm sure a lot of people at home really appreciate getting a quick look into life insurance. But again, they should all contact you.
Yeah, I mean, if you have a specific question, I think that everything is family-based and in your own household. So different situation for every single individual. So definitely contact us if you want to know more.
So we have two more. I just want to go over two quick steps of ways to save on life insurance or benefits of life insurance that we didn't get to cover right before our break. The second was using it as a vehicle to save more money in retirement. You know, most people think life insurance is to, give them a payout in the untimely event of their death, but you can also use it as a way to save more money in retirement. Can you tell me how that works?
Correct, yeah. You know, so with a IUL or a VUL, you are able to put money inside of the policy in a sub-account where it can grow, you know, play the market a little bit. An index universal would be fixed, fixed index universal will vary the market where it could go up and down. So there's more risk involved with a variable, but ultimately they're investment grade policies to build wealth.
Can you sum that up, but in easier terms? Okay, so you're saving money inside of a life insurance policy. Does that mean that you have like a savings account in there?
It's a sub-account that it rides with the policy. And what happens is you're putting money into that premium, and if you're putting money into that, you're feeding it, and it is playing some sort of index, say the S&P 500 or something like that inside of it, where they're going to give you a percentage. You're going to build wealth inside of there, and then later in life, you're going to pull that money out tax-free, and you're going to use that as an income source for retirement.
Okay, so how does it work? Does like half of it go to that? Can you decide?
Well, a portion of the premium is going to go into that account, but you can also feed more money into that monthly, into that sub-account to have that growth so you can pull it out later on in life for an income.
No, I know, let's say someone's already maxed out on how much they're saving a year. Is this going to count against that money that they're allowed to save up to a certain amount every year?
No, this is something that really high net worth individuals use that anybody can take advantage of at any time. It's just a strategy because you can use that vehicle to fund and ultimately not have the tax, have tax benefits on it later in life.
Yeah. So let's talk about health insurance. I know that it can be a huge expense through a person's lifetime. Health insurance is probably one of the biggest or one of the biggest expenses that everyone has to pay for. Do you know what I mean? They pretty much make us pay for health insurance now, whether we want to or not. What is it that, how much can that add up over a person's lifetime, do you really think, if they're not looking at it appropriately?
Oh, you could be paying over $3,000 a year times 30 years. That really can add up if you're in the wrong plan. Based on what your health conditions are and what plan you should probably be in.
Yeah. So health insurance, it's a huge expense over a person's lifetime. And honestly, I know that we overpay in insurance. We don't use it that much. I don't want to have to think about it. Do you know what I mean? I would rather have the peace of mind knowing it's there. But how could someone, if they really want to go into detail and look at it, how could you really tell, are you overpaying or are you underpaying?
I think if you took into consideration all the bills and co-pays that you might be paying throughout the year and kind of track it, that's honestly the only way you can do is track it, if you're doing a proper budget. But, it's human nature. Like you said, you go for the most expensive plan because you want to be protected of something and you're caught off guard. But the reality is, what I found over, my career doing this, a lot of people should not be in that plan. You're paying way too much money. You're not taking advantage of it because you're not going to the hospital. You're living a very healthy lifestyle, and you don't need to pay for that extra coverage. That could be diverted somewhere else.
So a healthcare coverage deductible. That means that you have to spend all of that money until you meet that amount?
How much you're paying out of pocket before the insurance company is going to pay for the rest. Correct.
So do you think that would be a good way to judge it, where let's say you're spending way too much, but you're not meeting that deductible? Is that a good way to kind of gauge it, you think?
It is. I mean, in general terms, the easiest way to explain it when a format like this would be, the younger you are, most likely you don't need to be in that more expensive plan because you're going to be taking care of your basic needs on the lower price plan. The older you age, more health conditions might arise where you should be in that plan. But again, if you're living a healthy lifestyle and everything's good, you don't need to be in that more expensive plan as you age. So take age into consideration for all of this as well.
Excellent. Guys, we're going to go to break real quick, but before that, I just want to point out the obviously easiest way to save on health insurance is to probably take better care of yourself. Make sure you're going on a run here and there. Get diet and exercise as a part of your plan. The better health you have, the less you're going to have to rely on health insurance, and that's probably the easiest way to save that a lot of people don't think about. We'll be right back.
I got into the financial space just answering a Craigslist ad, honestly. It kind of fell into my lap. I got out of the military. I went to college before, didn't know what I wanted to do. And it's just something that piqued my interest that, once I learned about it, I wanted to know more. I think what makes me keep on doing this is the fact that everybody's different, every family I meet with, so it keeps it very interesting. So we started out as independent, and then at one point I wanted to know more because the clients kept on asking me questions, so I wanted to advance, my knowledge. So I did work for Prudential for about a year and a half, and then I came back. I decided that I wanted to be independent. Again, I can go outside the box and pick the proper product for the clients. I feel as an independent advisor, I have more ability to find different financial products that are available, not just in one box. I think that everybody's family, all across America is completely different. No one family eats the same meal for dinner every single night. The recipes, even if they would be different, the ingredients. So it's just like that with the family situation. So while finance is pretty much standard and, set by mathematics, the family aspect brings a lot of fun for me because it keeps it interesting.
Guys, welcome back. I'm Clinton Smith, CEO of GCES. I'm here with Galen Bargerstock, our president. Today we have been talking about ways to save on insurance, whether it's life insurance or health insurance, which we already covered. And now, Galen, we're going to talk about other types of insurance.
Other types.
Without boring us, can you tell me some other types of insurance?
I can.
And what that means.
Yeah, I like the boring thing because anytime somebody really thinks of this, they kind of put it off, for another day because it is kind of boring to think about. But other types, cancer insurance, disability insurance, long-term care insurance, it's other types of insurances that you can insure for you. So if you get cancer, you're going to have coverage or get some money that you need to help pay for the care. Long-term care, if you need help performing any daily activity too, actually, but you have the coverage if you have it. So it's just ensuring protection. So
it's not just that, it's also car insurance, homeowners insurance. There are a bunch of different insurances, and guys, we love insurance. Insurance is a good thing for people. It helps a lot of people out whenever they need it, whenever they haven't been planning on it. But also, a lot of people can waste a ton of money by overpaying for insurance. I know that we have seen so many people that have insurance policies that they don't even understand. They haven't looked into them for years, and they don't even know what coverage it is that they're paying for. And that money is taking money out of their pocket that they could be putting into retirement.
Correct. Yeah. I mean, I know a ton of people that don't know the deductions on their paycheck that they even have this policy for, disability. And then I look at their paycheck and you have 9 months of sick leave saved up, but you're paying, $80 bi-weekly to have a disability policy when you have all this time. So it doesn't really make sense, some of the insurance lines. It might make sense in the beginning, but if you don't do that tune-up, properly over the years, you could be paying a lot more.
So we're talking about homeowners and car insurance specifically. I know, cancer insurance, disability, supplemental benefits, those, some people don't even have them, but everyone pretty much has homeowners and they have car insurance. So I know one of the ways that you want to make sure you're checking in on your car insurance regularly. I just got a new car, guys, and my car insurance went up. I called and I just asked my person, hey, do you guys have any discounts? Do you have anything else I can do? And there are programs out there as well, and you just would have to check with your property and casualty provider, Nationwide, whoever. By the way, guys, we don't sell that type of insurance. We can help answer questions about it, but we don't deal with any kind of property and casualty, home, auto insurance, anything like that.
No, but it does serve a purpose in a financial plan because, like you said, everybody's going to have these products. And if you can make sure that you are in the cheapest rate with good coverage, then you could put that money and divert it somewhere else towards savings. So, it's very important.
Yeah, and I do know that there are programs, you have different programs where you can put GPS on your phone. I know some companies offer that where it's like a safe driver program. But guys, if you want to try to save on car insurance, the best thing to do is to just call around, shop a couple different policies, and just see if you can, make sure you're comparing apples and apples. You don't want to take and move yourself into a cheaper policy if then you have a huge deductible that you don't have the money saved up for. Correct. Am I right?
Yeah, 100%.
So let's talk about other ways. Supplemental benefits, back to the cancer, all of that stuff. What are some ways that you can save? Are there ways to save on that?
There actually are. So cancer, some people will pick up cancer policies because it runs in their family, or you just might be scared. But there are different types of cancer policies where one, you might just pay and the policy, when you cancel, you don't get anything. But there's cancer policies that might have a term, like a 20-year term, and if you don't have cancer in that 20 years, Well, now we're going to refund you your money, and it's up to you if you want to go for another 20 years. So there's ways to make sure you're educated about that type of insurance that you're buying, because who wouldn't want their money back if they didn't get cancer?
Yeah. No, I know, guys, Galen, he has a list of about 78 pet peeves that I could share with you all on maybe another episode. But I know one of them is whenever he meets with people that have a disability policy that they're paying a ton of money for, and they have like 6, 9 months, 12 months of sick time already saved up. How often do you really run into this?
I run into it a lot. I mean, unfortunately, it is one of my biggest pet peeves. It's right up there at the top. Why would you have a short-term disability policy if you have 6 or 9 months of, time off if you need to take the time off? It just doesn't make sense if you have the sick leave. But again, people will purchase it, not remember everything about it. They're going to ride that and carry it on, and then 20 years later they find out that they never actually claimed the policy, and they wasted all that money when they could have been putting that in their investments.
Yeah. Guys, disability policies, they are a thing, they serve a purpose,
Yes.
but also there are some downfalls to them that we just, it's not always a great recommendation for someone to get a disability policy, especially someone that already has health issues and pre-existing conditions. We've seen that before, where clients will put in a claim for disability insurance and they end up getting it denied because they visited their doctor 1 year ago and the doctor checked their heart, even though they know that it was fine, but just because they checked it, automatic denial because it's a pre-existing condition.
Well, some of the policies actually have on there that if you're currently taking a medication from one of those, then, if you're taking high blood pressure pills because you had a heart attack 5 years ago, well, now that's still a condition because you're on the medication for it. So you just have to be careful. I only really recommend them if you have a concern, like if your job is very physical, like you could get injured, then it's appropriate. Or if you're at the beginning of your career, and you don't have sick leave or annual leave. So
ultimately, guys, we want you to make sure you're making smart decisions when it comes to purchasing life insurance, when it comes to purchasing health insurance, and even looking at the other insurances that you have out there, just to make sure that you understand completely all of the things that you're paying for. And Galen, break it down. Why is this a good idea for people to do this? And why is it good for people to check in regularly on their insurance?
Well, in a nutshell, if you're overpaying in one place, you could take that money and you could put it right back into your investments. Your 401k, you could invest and you could have a larger balance and you could have a better retirement. It's not that I don't like insurance. I love insurance, but the aspect of overpaying for the wrong insurance when you should have the right insurance, it's really what needs to be tailored to you specifically.
Excellent. Guys, I want to thank you so much for taking the time to hang out with us today for Our 2 Cents. It's been a great time speaking with you guys about ways to save on health insurance, life insurance, and other types of insurances. You can always give us a call, 888-391-3465. Guys, have a great and wonderful day, and we will see you soon.